Good afternoon. Hello, my name is Amy Boland. I'm an audit partner with Gelman, Rosenberg & Friedman, and I will be your moderator for today's webinar entitled Auditee Responsibilities under Subpart F of the Uniform Guidance. The first slide is some administrative items with respect to the webinar. If you experience any technical difficulties, please refer to this slide. If you have questions, please submit them using the Q&A function, and we will try to address as many questions as possible at the end of the presentation. I would like to get started by introducing the presenters. First, we have Terri McKnight, CPA. She is a partner at Gelman, Rosenberg & Friedman CPAs. In addition, she has been the director of the firm's audit department for over 13 years. Terri has more than 29 years of accounting and auditing experience. Her primary focus has been auditing and consulting for organizations within the nonprofit industry. Next, we have Jennifer Arminger, CPA, CFE, who was just recently promoted to partner at Gelman, Rosenberg & Friedman, effective January 1st, 2016. Jen performs financial audits and employee benefit audits for nonprofit organizations. Both Terri and Jen have performed numerous audits in accordance with GAAP and government auditing standards that have required compliance with the OMB circulars and now compliance under the new uniform guidance. Over the past year, Terri, Jen, and myself have presented several webinars and have given in-person presentations regarding the different subparts of the uniform guidance. Today, our primary focus will be on auditees' responsibilities under Subpart F. Terri will start us off with a quick refresher of OMB Objectives and effective dates for implementation of the new uniform guidance, and then dive into Subpart F. I will turn it over to Terri.
Thank you, Amy. Good afternoon, everyone. I want to first highlight that the federal government does issue over $600 billion in grants, cooperative agreements, and other types of financial instruments on an annual basis. So the overall arching concept was to create guidance that would help better administer all those awards. In an effort to meet their goal, OMB wanted to combine and streamline the federal regulations into a single comprehensive document that addresses policy problems and gaps that existed under the circulars. As part of this, the guidance does mandate the timing and content of federal program announcements to the public. It establishes pre-risk assessments to be applied to ensure better federal agency and pass-through entity review of the financial risk and merit of applications prior to the issuance of the award. It also establishes a robust oversight of subrecipients. What was considered best practice is now required for compliance. As OMB wants federal agencies to be more accountable, they also want auditors to perform better audits, and they want grantees to address any deficiencies in a timely manner. So bottom line, they're putting this all on notice. As noted at the top of the slide, the entire name of the guidance is Title II, Code of Federal Regulations, Part 200, Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. Wow, because this name is quite a mouthful, everyone just says the Uniform Guidance. You can easily find the entire document. I'm sorry, I'm having a little bit of an issue with our PowerPoint here, so sorry about that. You can easily find the entire document on the internet. It is comprised of 6 different subparts as noted here, followed by the appendix. Today we are focusing on Subpart F for auditees. However, we at Gelman, Rosenberg & Friedman continue to recommend that everyone read the Uniform Guidance in its entirety to understand all the requirements for auditees as well as for the auditors and federal agencies. The general provisions in Subpart B talks about the purpose and the applicability of the Uniform Guidance. This part establishes mandatory uniform administrative requirements, cost principles, and audit requirements for federal awards issued to non-federal entities. It provides the basis for a systematic and periodic collection and uniform submission by federal agencies of information on all federal financial assistance programs to OMB. It also establishes federal policies related to the delivery of information to the public, including through the use of electronic media. It details the manner in which GSA, the General Service Administration, OMB, and federal agencies are to carry out their statutory responsibilities under the Federal Program Information Act. Again, it is applicable to non-federal entities, including states, local governments, institutes of higher education, Indian tribes, and nonprofit organizations. The uniform guidance is discretionary to for-profit companies and foreign entities. Of course, there's always exceptions to the rules. Please refer to these sections in the guidance. Here we have them listed, CFR 200.100D. It gives a complete detailed list. An example of that would be block grant awards issued back in the 80s. And then section 200.102 talks about a case-by-case basis. This slide is just to reiterate that the uniform guidance does supersede the circular starting from A21 all the way down through A133. In order to apply uniform guidance, you must understand the effective dates. The federal agency implementation date was effective December 26, 2014. When they first came out with it, they did delay the implementation of the procurement standards, which is located in Subpart D of the Uniform Guidance, for 1 year. And then in September of 2015, they delayed it for an additional year, so there is a 2-year deferral that organizations can adopt. If the recipient does decide to wait those 2 years, you must document this decision in their internal procurement policies. Now, Subpart F, the audit requirements only, begins for recipients' fiscal years beginning after December 26, 2014. Therefore, the December 31st, 15 year end is the first to apply the new regulation. And I also just highlighted here for subrecipients and subawards that the effective date of the new guidance for subawards is the same as the effective date of the federal award from which the subaward is made. And all the requirements from the original award does flow down to the subaward. Now, continuing with the effective dates, auditees with March, June, and September 2015 year ends will follow the single audit requirements under the old OMB Circular A133 and will apply the new uniform guidance requirements for administration and cost principles, subparts B through E, for all new awards issued after December 26, 2014, and to funding increments to existing awards when considered a change in the award. Now, we have completed numerous audits for these fiscal year ends and have found that federal agencies are inconsistent in their approach to incremental funding. Some are moving directly into the new uniform guidance where others are not. We highly recommend if the incremental funding award does not specifically address this issue, please contact the grantor and get written documentation on which regulation to use. Now, for the December 31st, 2015 year ends and beyond, A133 is obsolete and everyone must follow the Subpart F of the Uniform Guidance. The administrative and cost principles follows the same guidance as I just stated above. Again, the Uniform Guidance applies when new awards are issued after December 26, 2014, and for funding increments to old awards when considered a change in the award. So the bottom line is your finance and grant and administrative staff must pay attention to the issuance dates of your awards in order to apply the right regulations for the administrative requirements and cost principles. The transition period for some of these old awards may last for multiple years. So that means that auditees, as well as the auditors, will be using the different regulations for future year audits. Okay. Now I'm going to specifically talk about audit requirements under Subpart F. A non-federal entity that expends $750,000 or more is required to have a single audit or possibly a program-specific audit. The threshold used to be $500,000 under the old A133. You are allowed to have a program-specific audit if there's only one federal program and the terms and conditions of the award do not require a financial statement audit. You may not elect a program-specific audit for research and development awards unless it is approved in advance and all of the federal awards expended were received from the same federal agency or the same federal agency in the pass-through entity. Now, organizations that do not meet the new threshold of $750,000 will be exempted from single audits. They estimate that 5,000 organizations will fall into this category. Please be mindful, if you are one of those organizations, you are still responsible for establishing systems to be in compliance with uniform guidance, and your books and records must be available for review or audit if the IGs, the pass-through entity, or the Government Accountability Office wishes to take a look. So this slide talks about the basis for determining federal awards. The determination of when a federal award is expended must be based on when the activity related to the federal award occurs. Generally, it is when the activity pertains to events that requires the non-federal entity to comply with federal statutes, regulations, and the terms and conditions of the awards. The guidance specifically states the expenditures or expense transactions associated with awards would include, and I have them listed here for you, grants, cost reimbursable contracts under the FAR, compacts with Indian tribes, cooperative agreements, and direct appropriations, disbursement of funds to subrecipients, use of loan and loan guarantee programs, the receipt of property or surplus property, the receipt or use of program income, distribution or use of food commodities, and the disbursement of amounts entitling the non-federal entity to an interest subsidy. Now, for those loan and loan guarantees, they do give you specific guidance on how to calculate the amount to be included, which is shown here. Now, for those prior loan and loan guarantees, if there are no continuing compliance requirements, they are excluded. And specifically to loan and loan guarantees for the Institute of Higher Education, if the IHE did not make the loan, then only the value of the loans made during the audit period must be considered, and the balance of the loans from prior audit periods are not included. For endowment funds, the cumulative balance of the federal awards for an endowment funds are in each period. For the in-kind assistance, you must value those at fair market value, which would include free rent, commodities, donated property, etc. Now, if the free rent is received by itself, it's not is not considered a federal award unless received as part of an award to carry out the federal program. Medicare is not considered. Medicaid is not considered unless the state does require. And then there's some certain loans provided by the National Credit Union Administration that would be included. Now, please remember that an auditee may be a recipient, a subrecipient, and a contractor. When you are a recipient or a subrecipient, you are assisting, stimulating, supporting a federal award and would include those expenditures under a federal award. Now, payments received for goods and services as a contractor, which used to be referred to as a vendor in the old circulars, is not considered a federal award and should not be included. If you receive a fixed amount award, those funds are not included as well. However, it is important to know that the non-federal entity must certify in writing to the federal awarding agency or pass-through entity at the end of the award that the project or activity was completed or the level of effort was expended. If that did not occur, the amount of the federal award must be adjusted. Now, an auditee is also responsible for procuring the audit using the procurement standards under the uniform guidance, or if the organization deferred those procurement standards for 2 years, they are to procure using their existing procurement policies. So you still have to procure whether you're doing under the new uniform guidance or your old procedures. Now, we all know that price has been an important factor when selecting your auditor. However, you really need to make sure the auditor you select has single audit experience and understands the new uniform guidance regulations. This will help you to ensure you have systems in place that comply with uniform guidance. I also want to mention here that if you are issuing an RFP for single audit, do not forget to update the language in the RFP. You will be asking for a single audit prepared in accordance with Subpart F of the Uniform Guidance not OMB Circular A133. One last thing regarding auditors, there's some restrictions on the auditors in preparing the indirect cost proposal. If your indirect cost recovered is in the prior year is greater than that $1 million, then your auditor cannot prepare that for you. In regards to financial statements, auditees are responsible for preparing them, and those financial statements must be for the same organizational unit and fiscal year that is chosen to meet the requirements under the uniform guidance. Your financial statements may include departments, agencies, and other organizational entities that have separate audits. The uniform guidance specifically states that you must have or you must establish those internal control systems. They also state that you should, which is not a must, but a best practice, comply with the internal control framework utilizing COSO or GAO, the Green Book. If an auditee voluntarily decides to prepare their financial statements using a non-GAAP basis, then you automatically cannot be considered a low-risk auditee, which impacts how much testing auditors will have to perform. To my knowledge, I believe all of our clients does use a GAAP basis for their financial statements. Once the auditee has identified those expenditures and expenses of the federal awards, as I discussed on that previous slide, the basis for determining federal awards, the auditee is responsible for preparing the schedule of expenditure of federal awards, also known as the SEFA. The SEFA must be for the same period as the financial statements. I am now going to turn it over to Jen. Jen?
Great. Thanks so much, Terri. So taking a deeper dive into the SEFA, Schedule of Expenditures of Federal Awards, we'll see that some of the basic info has remained the same, but there is a theme here that things that could have previously been included in the footnotes now must be on the face of the SEFA. So for the first two items, there are no real changes from before. We're still including our federal grantor, our pass-through agency when applicable, the program and cluster title, as well as the CFDA number. But on number 3, this is something new that we will see under the Subpart F of Uniform Guidance. For any indirect awards, the pass-through is responsible for providing a unique identification number, and that number will now be included in a separate column on the face of the SEFA. Additionally, skipping down to number 5, the total amounts provided to subrecipients under each federal award will also be included on the face of the SEFA. And these are things that we saw could have been included in the footnotes previously. Item number 6, we would include the total awards expended for loan and loan guarantee programs, as well as any non-cash awards. And again, this was taken from an option to a footnote to the face of the SEFA. And finally, the SEFA should include a total for any clusters of programs. The auditee is responsible for appropriately clustering their programs together. Some of the more common ones we see are that research and development cluster or the SNAP cluster. And clients can find out whether their program is part of a cluster by searching Part 5 of the compliance supplement. We also were made aware that any NIH or NSF funding is now considered R&D, so research and development, 100% of their awards. So if you do have any NIH or NSF funding, those would be clustered together as part of the research and development cluster. So reviewing some items that will remain and should be part of the footnotes to the SEFA. The first two, basis of presentation and cost principle used, were existing footnotes, and we will see in an example subsequently that we will modify these to be compliant with uniform guidance. Number 3, we should include a footnote for the total federal loan balances outstanding at the end of the audit period. And the final item, which is new, the entity will provide a statement as to whether they elected to use the 10% de minimis indirect cost rate. So if we go on to some examples that we've provided, the first is an example of an illustrative SEFA. Starting from the far left, we could see that we have provided the federal grantor, the pass-through entity when applicable, and the program title or cluster title. The second column, no real change. We're still identifying the CFDA number for each of our federal awards. But the third column is where we see something new. This addresses that unique identification number for any indirect awards. Here we'll see the last program is the only indirect award we have on the SEFA, and that number has been included appropriately. Furthermore, the next column shows the total amount of the total expenditures that were passed through to other subrecipients. And finally, the total federal expenditures, which is unchanged from what we had previously been doing. Furthermore, we've also included some examples of the footnotes to the SEFA. The first being the basis of presentation. And we bolded where there's a significant change, starting in lines 2 and 3. The schedule of federal expenditures, so as Terri was saying, for any auditees with a December 31st, 2015 year-end and beyond, is now prepared in accordance with Title II U.S. Code of Federal Regulations or Uniform Guidance. So if we have any 9/30/2015 or June 30, 2015 entities out there that are still undergoing the audit, those are still subject to the old OMB A133 requirements. Note 2 is our summary of significant accounting policies. And here we'll see again in line 2, we bolded the change that expenditures are recognized following the cost principles contained in uniform guidance. And here we have a little asterisk, and down below we detail that, as Terri has previously mentioned, and we all may know at this point, we might have multi-year awards that were issued prior to the establishment of uniform guidance. Accordingly, those awards might be subject to the old OMB circular cost principles, whether that be A122, A102, A87, and those could continue for a number of years. However, we also might have new awards issued under the uniform guidance. So we would modify this footnote accordingly to indicate what type of expenses and what they are subject to on our SEFA. And finally, on footnote 2, I do want to draw your attention to the last sentence. Here we have given an example of an entity has or has not elected to use the 10% de minimis indirect cost rate. And so that will be included in the footnotes for all entities moving forward. And finally, this is just an example of what a federal loan program footnote might look like for the outstanding balances as of the end of the fiscal year. Moving right along to some of the further auditee requirements. So here we're really focusing on the responsibility of the auditee to promptly follow up on their audit findings. And the uniform guidance has put an emphasis on 2 documents and really making it a point that the auditee understands that these documents are their documents. They want the auditee to take responsibility, take ownership. The 2 documents, first being the summary of prior audit findings. So this would include a list of all audit findings in your prior year audit report and a current year status. So if the audit finding has been cleared, the auditee would state that the finding is now cleared and the corrective action that was taken to clear that finding. However, when a prior year audit finding has not been cleared, the auditee is responsible for first disclosing the reason for reoccurrence, and then furthermore, the future planned corrective action to rectify the issue. Finally, the guidance also gives the auditee an opportunity to indicate whether they believe the finding is no longer valid, and they must provide the reason for this position. The second auditee document is the corrective action plan, which typically comes at the end of the audit. So the corrective action plan would include all of your prior year audit findings that have not been cleared throughout the year, as well as any additional audit findings that resulted as part of that audit process. So this should be a detailed document on the steps that the organization will take to rectify the identified finding. It would include the name and contact person of the responsible official, as well as an anticipated completion date. And again, the guidance provides an opportunity for the auditee to explain and give a reason if they do not agree with a certain finding. So due to the emphasis that these are auditee documents, I know here at Gelman, Rosenberg, and Friedman, we are recommending to our clients that they are put on client letterhead to be clear that it is a client-prepared document. Additionally, because we will see that these documents are uploaded to the Federal Audit Clearinghouse as part of the audit package. So some requirements surrounding just the completion of the audit process. So starting with that data collection form and that audit package that gets submitted to the Federal Audit Clearinghouse. This does need to be completed within the earlier of 30 days after receipt of the audit report or 9 months after the fiscal year ends. And so the 9 months is really the outside maximum limit in which an auditee should submit their audit report and package to the Federal Clearinghouse. An auditee is responsible for making this information publicly available for inspection, and typically the way that most organizations accomplish this is through posting the information on their website. That does satisfy the requirement. So again, the Federal Audit Clearinghouse is the repository for the record of Subpart S and the audit results. So at the end of the audit, when we submit the data collection form, it is accompanied by an entire package, and that includes the financial statements, the SEFA, as well as the auditor's report and opinion over the financial statements and SEFA. And then in addition, that package does include those two auditee documents, the summary of scheduled prior year finding and corrective action plan. This submission process is an electronic process, and it is certified by a senior level of management. Typically, the management letter is not submitted with the package unless it's specifically requested. And finally, the data package and data collection form are subject to the same record retention rules as other federal documentation, being that 3-year requirement. So as of today, the data collection form has not been formally amended to comply with the uniform guidance. However, OMB has published their notice of proposed changes to the data collection form, and that is open for public comment until February 8th, 2016. And yeah, some of the more notable changes from the list of major changes that we have here. First is that the new data collection form would only require or permit a 3-digit CFDA number, whereas before we might have been able to spell out a whole unknown. There would be a part on whether we could identify if a program is part of a larger cluster, and a part where we could subtotal the federal programs and the cluster. We would be bringing forward that pass-through unique identification number and showing the amounts of subrecipient expenditures under each federal award. And one more thing just to note, this would include an area where we could indicate whether a finding is a repeat finding. So OMB does want feedback on the proposed changes to the data collection form. I know Gelman, Rosenberg, and Freeman, we've provided feedback specifically about some of the redundancy that they are requesting on the data collection form for information that can already be found in the auditor's opinion in that package that's submitted. Finally, on the auditee responsibility side, we did want to highlight a really great resource for you all. Each year, OMB publishes a compliance supplement, and of this compliance supplement, kind of focusing on parts 2 and 3, the part 2 gives an actual matrix of compliance requirements that the federal agencies can impose on recipients of their federal awards. So here we have compliance requirements A through M listed, and this used to be a 14 compliance requirements, but you'll see D and K were removed and are reserved for future use. So technically now we only have 12 compliance requirements. However, why this is important to you, not only to ensure that your federal awards are in compliance with what the OMB indicates that award is subject to, but it also gives you a great insight into the audit process and procedures. As auditors, we take a look at parts 2 and 3 of the compliance supplement for the audit procedures that we are to perform when these are applicable to your awards. So we did want to encourage you to take a look, see what your awards are subject to, and go to that part 3 to see, depending on whether the award is subject to the old circulars in 3.1 or the new uniform guidance in 3.2, what those audit steps would be. So that was an overall highlight of the auditee responsibilities. There were some changes on the audit requirement side. The first couple, no significant change from before. We are still conducting our audit in accordance with GAAP and GAGAS, so the government auditing standards. We are ensuring the SEFA is fairly presented in relation to the financial statements, and we are continuing to gain an understanding of internal controls, as well as planning our test work to support low assessed control risk. So no significant changes there. However, the next several items, we did see some changes. First, what we classify a program as a type A or a type B, which is solely based on a dollar threshold amount, that increased from $300,000 to the $750,000 limit, so to match that general audit requirement threshold. When we do have a classification of type A or B, whether we assess that program at high or low risk, now we follow a very strict set of rules to say whether something is high or low, whereas before it was very much left to auditors' judgment. So because of this, we will see a change in kind of the programs that we will be auditing and that your auditors will be requesting documentation for. And finally, the auditee, so the actual entity assessment of whether the entity is considered low risk. Before, if the entity was deemed low risk, we would need a minimum of 25% coverage of the SEFA, and here that's been reduced to 20%. And again, for high-risk auditees, that was 50%, and now that's been reduced to 40%. And we'll shortly take a look at what qualifies an auditee as low risk. Some of the audit findings that would result as part of the audit procedure: still significant deficiencies and material weaknesses, any known question cost greater than $25,000, and that was increased from $10,000 for not only a major program, but also if we come across it in another program that we're not specifically testing, that would still be reported as a finding. Any circumstances on why our opinion on compliance is other than unmodified, and if we come across any known or likely fraud. And finally, just to touch base on that criteria of what makes an entity or an auditee low risk, it is a 2-year look back. So the entity would have had to have met all of these requirements for each of the previous 2 years. The first one, which I think we see is the issue most often or sometimes with our clients, not only do single audits need to be conducted on an annual basis for each of the previous 2 years, but the auditee must have submitted that data collection form within the earlier of 30 calendar days or that 9-month period. So once an auditee submits it beyond the 9-month period, they are automatically classified as a high-risk entity, and that results in more coverage and more audit test work. So we do encourage the timeliness of your high-quality audits. If there was any sort of unmodified, they must have had an unmodified opinion on the financial statements as well as the in relation to opinion on the SEFA. The entity could not have had any material weaknesses in financial reporting under GAGIS, no going concern opinion. They could not have had any internal control deficiencies classified as material weaknesses in Type A programs, or a modified opinion on the major programs. And finally, they could not have had any known or likely question costs that exceeded 5% of the total federal expenditures. So with that, I'm going to turn it back over to Terri with some best practices.
Thank you, Jennifer. Now that you've heard a summary of the audit responsibilities under Subpart F, and I do reiterate, it is a summary. We do encourage you to go read the uniform document in its entirety from start to finish so that you can see everything that's listed out. But we have also included a detailed best practice to-do list to help you implement the uniform guidance. So I'm going to kind of go through that as of right now. So first and foremost, you're going to want to identify a champion to oversee this process. And don't push it down to the lowest level. You need to have senior management involved from day one till the very end. Go online, get the CFR 200, make sure that everyone in your finance and your grant program staff has that document, have them read it, provide that training to them. You can do the in-house trainings. There's all kinds of external seminars like we're doing today in the webinars. We would certainly, could help you if you still need some help outside. We could come in and do another webinar or some type of in-house training for you. So please let us know if we could be of assistance there. Focus on the areas of most significant first, such as the procurement policies and the subrecipient monitoring and the cost principles. So you could kind of take a look to see where your policies and procedures are and kind of compare it to what the new uniform guidance is requiring and really kind of hit the top ones first that it's going to impact you the most. Now the SEFA has become the star of the day, so again, review that SEFA, go through and make sure you have all the required data elements and it's a part of your financial systems. Again, the most important thing is really understanding the implementation date for those cost principles as well as the administrative requirements. So please go back and review not just all the new awards, but also all of the old awards, and make sure you've properly identified if you are following the uniform guidance, new administrative requirements and cost principles, or are you following the old circulars. So go through all of those, and again, include those sub-awards and make sure that you've properly identified those and what guidance that you are following. Review all the contracts and the sub-recipient relationships to ensure that they have been properly identified as either the acquisition, which would be, or the assistance of award. So you either have a contract relationship or a sub-award relationship. Establish those financial and program management systems to comply with the new statutory and national policy requirements. And we have given you the Code of Federal Regulations of exactly where to find those within the uniform guidance for easy reference. And the internal controls, again, this is a very big part of the new uniform guidance. Under the CFR 200.302, you must, which is a requirement, must have effective controls over and the accountability for all funds, property, and other assets. So it is a must, it is mandatory. And then they say you establish internal controls to provide reasonable assurance and that you should be in compliance with COSO or the Green Book. Now remember, should is not a must, it is a best practice as I mentioned earlier. And the Green Book, just to kind of highlight here, is pretty much the same concept as COSO, but they put it into terms of the state and local governments. But do take a look at that as well. Some of the hot topics that everyone's talking about is you must, which means mandatory, establish conflict of interest policies and disclose in writing any potential conflict of interest. You must establish new procurement policies. Again, you have that 2-year deferral. If you do defer, you have to put it somewhere in your internal controls that you're deferring. But do take a look at that. We are recommending, especially to my clients, that that you do implement as soon as possible. The whole idea was that procurement was an area that was pretty much weak in the eyes of the federal government of how the auditees were procuring their expenses. So they really wanted to kind of put some bottom line requirements in how to procure. So, do take a look at those procurement policies, and if you are deferred, do follow the ones that you have in place. You're not off the hook yet. Must establish guidelines for subrecipient managing and monitoring, including that pre-risk assessments. Again, we've given you the CFR for easy reference. Update the policies for compliance with the new cost principles. If you were following A122, there's not a lot of changes, but there are some significant changes that you should take a look at. Update those policies regarding those indirect cost rates. Again, there's that 10% de minimis indirect cost rate that is available now. Another hot topic here is the written policies for cash management and allowability of costs. This is a must, so it is mandatory that you do put something in place regarding cash management and what those procedures are. Evaluate and monitor compliance and take appropriate action when non-compliance. Again, that's where OMB is putting us all on notice. They want auditees to monitor what they're doing and make sure that they fix any type of non-compliance in a timely manner. Review those property records for all required data elements and the inventory procedures. Again, we've given you the CFR reference. As Jennifer stated, that 2015 compliance supplement is a great resource for auditees as well as for the auditors. It almost, you can kind of go and see what the auditors are going to do and how they need to test those. Kind of like a cheat sheet before the test is given to the auditees. So you might want to take a look at that and look at those compliance requirements, and always look to your grant agreement for any type of special test and special requirements that goes along with the award. There's prior year audit findings and corrective action plans. Again, this is completely new for auditees, and I'm sure your auditors will help you get through that process, especially in the first year, to make sure that that is properly documented by the auditee and included in the reporting package that goes to the Federal Clearinghouse. The instructions for the completion of the data collection form, they are, going to change that data collection form. They're saying late February is when we should see the new data collection form for the December of 2015 year ends. So it's going to be another month before we get those. And stay away from Sally. We use this as an audit. We say this to our auditors all the time. Do not do the same as last year. And it really applies to the auditees as well. And what's that meaning is that now that you have uniform guidance, you're implementing new policies and procedures. You want to let your staff know that just because you did something last year, it could very well change this year. So you're not doing the same as last year. And bottom line, I'm hoping you're talking with your auditors now. Start that planning process for your upcoming audits. Look at your SEFA, go through it now and see what, regulations that you are doing for each individual grant that you have. Your auditors are a very good resource, and please make sure that the auditors that you are working with do have the knowledge of the new uniform guidance so that they can be a good resource for you. And here we just have a list of some available resources for you. Of course, you can always call us. As I said, we're here to help in any way that we can. We kind of give you the exact access to the PowerPoint presentation that was done a while ago. And we'll also have the PowerPoint presentation today located on our website, and I'll have Amy tell you exactly where that should be. Again, look at all the various uniform guidance related documents, which is always a good place to start. COFAR, go to the COFAR Q&As. They actually have some really good answers to the questions of what certain auditees have been posting out there, so that's a great resource for you as well. Access and archive the OMB web events. They're always a great resource. Purchasing the government auditing standards and single audit guides. Again, all the auditors have them, but I also recommend that auditees have them too, because it gives you some very detailed pre-uniform guidance and then, after the implementation of uniform guidance, and it's a really nice detailed book. Again, that 2015 compliance supplement. COSO, you can go on the AICPA website and purchase that directly. I would have that as part of your library. It talks about the internal control framework for internal controls, and then accessing the draft form instructions of the data collection form. So there's another website there for you as well. So that's all we have today. And as again, we've been focusing on specifically Subpart F and how it relates to the auditees. And again, it's for these upcoming December 31st, 2015 year ends, and we're very excited. We have completed one audit as of today for December 31st. We had one client that was able to be ready for audit, and the report just went out with all the updated language. So it's very exciting times for not only for the auditee, but also for the auditors. So Amy, I'll turn it back over to you.
Thanks, Terri. Thanks, Jen. Thank you for the information. I do want to address a few things. One of the questions we did have is about making the slides available, and we will follow up with an email as an e-blast to all of the attendees with a link to the slides and a link to a recording of this webinar as well. Basically, I do want to answer some other questions. Terri, if you could go into a little bit more detail on procurement. And then another question is about the cash management policy, the written policy that has to be established and what that should include.
Sure, Amy, I'd be more than happy to. For the procurement requirements, as we all know, over the years, a lot of organizations have been using that sole source justification to satisfy their procurement. So when OMB did get together and talk about, designing these uniform guidance and streamlining these policies, and they really wanted auditees to improve on their procurement policies. So they did come up with 5 methods of procurement that they want all their auditees to follow. The first method is procurement by micro purchases, and this is for anything purchased under $3,000. So you can purchase anything without soliciting any type of competitive quotation if the non-federal entity considers the price to be reasonable. So that's the first method. The second method is procurement by small purchases. And here they say anything that's purchased from $3,000 up to the simplified acquisition threshold, which is $150,000, you must obtain price or rate quotations from adequate number of qualified sources. Now, this does not need to be in writing. You can use the internet, you can call different vendors to see what those particular the cost of the procurement or those purchases will be. Again, it does not have to be in writing. However, what you do have to have in writing is what you did to satisfy the number of qualified sources. So you don't have to have that competitive proposal or sealed bid or whatnot, but you do have to say, okay, I reached out to Staples, I reached out to office supplies, or whatever the case may be, and then document that you chose XYZ as the procurement for small purchases. So that's different. And again, it does go up to the simplified acquisition threshold, which is $150,000. But you don't have to go that high. It can be less than $150,000. You need to look at your organization and figure out what is appropriate for your organization based on the size and the volume of transactions that you do. So a lot of different things can come into play there. The third option is to actually do a procurement by sealed bids. That would be the third one. Fourth, procurement by competitive proposal would be the number 4. And then the last opportunity would be procurement by non-competitive proposal. And they've given you specifics here for that sole source. So they specifically say it has to be available only from one single source. 2, emergency will not permit a delay resulting from competitive solicitation. 3, you've accepted and included it in the proposal, which I would highly recommend if you are going to do the sole source. Here, I would put it into your proposal as part of the process and get it approved by your agency, so there's no misunderstandings. And then the other option, they allow you to, after solicitation of a number of sources, you determine that competition is just inadequate. It just will not work. So those are the 5 methods of procurement that needs to be followed. They also say within your accounting policies and procedures in the purchasing practice that you discuss your code of conduct, obviously the 5 methods of procurement, how you're going to mitigate against conflict of interest and mandatory disclosures, how you're going to ensure the applicable flow down clauses and terms and conditions as you subcontract out. You also want to define the lines of authority and responsibility within the system and ensure that the procurements are based on authorized requisitions. So those are some of the things to think about as you start relooking at your procurement procedures. And as far as the cash management goes, this is the first time that they are requiring the cash management procedures to be in writing as part of your policies and procedures. The non-federal entity, other than states, the payment method must minimize the time elapsed between the transfer of funds from the U.S. Treasury or the pass-through compared to the disbursement of the non-federal entity where the payment is being made by the electronic funds transfer or issuance or redemptions of checks, etc. So you want to make sure that that the drawdowns are being spent very timely. So included in those policies and procedures, you just want to talk about you know, how you're drawing down those funds, how you're minimizing the time elapsing between the transfer of funds and the disbursement of funds, and the financial management systems that you have that meets the standards for the control and accountability to ensure that you're not drawing down in excess of what you're spending. So those are the things you need to think about as you do your cash management. It's all about spending that money fairly quickly after you've drawn it down from the federal government. They do say that the timing and the amount of the advance payments that you do receive should be as close as administratively feasible to the actual disbursement by the non-federal entity. So again, they don't want the auditee to have a tremendous amount of federal money on hand at the end of each month or the end of each period. Amy, does that?
Yes, thank you, Terry. We did get another question about, is there an easy or a concise resource of the changes between the old and the new guidance? And unfortunately, I don't think there is that exact type of resource out there that shows you exactly the changes between the old and the new. I think that is partially what we've been trying to do in some of our past webinars and presentations, is trying to give some highlights of that. So we could absolutely give you some of our presentations that may help. One of the things that we noted, and as Terry has just gone through, procurement was a big area of change, and she has gone through a lot of that for you. Another area of change that has come about is in the subrecipient area. So if you have subrecipients, it's going to be very important for you to go to CFR 200. It starts in section 200.330, and there are some very clear requirements now that for subrecipients. And first and foremost, you're going to have to establish it if it is truly a subrecipient or if it is a subcontract, because that will change the requirements. But just as a brief highlight on that, because if you do establish that it is a subrecipient, one of the items that has more clarification under CFR 200, especially under section .331, is that every subaward has to be clearly identified. It has to have the same elements that are listed in CFR 210 that are supposed to be in your federal award. You have to pass those same elements to your subrecipients. So you're going to want to take a look at that and make sure that all your subrecipient awards have those required elements. And then a very key issue that has changed this year, or under the uniform guidance, is those pre-risk assessments. Well, where you may have been doing those in the past, they now have to be formally documented. So if you have subrecipients and prior to issuance of those, you are going to have to identify your high-risk subrecipients, medium, low, some sort of, what we've been recommending is some sort of matrix of that, and you're going to have to establish a policy of your subrecipient monitoring requirements under each of those levels. So if you feel that that subrecipient is a higher risk, there's going to be a set of established procedures that you're going to follow as of your part of your subrecipient policies or procedures. And what will happen is, as the auditors, we will look at your subrecipient monitoring policy, we will look at that pre-risk assessment, and we will ensure that you're in fact following your policy and following what the requirements are that you felt were going to be required if you assigned that subrecipient at that level. And you just have to always remember that any of the requirements that are required of you, there's a flow-down effect through to your subrecipients, and that does include cash management. I just wanted to highlight that since we did specifically talk about cash management. So there's also the cash management issue on your subrecipients as well. I think we are basically have come to the end of our time. I want to thank everyone. Thank you, Jen. Thank you, Terry. And if there are any other questions that we've received that we cannot address, we will respond to you by email later today with any responses. Thanks, and have a great day.